Welcome, everybody. Thanks for joining us in this webinar. Um, we find that these webinars are very beneficial, and I hope that the hour you spend with us, you'll think will be the fabulous hour you spent this entire week. And if it isn't, in the survey, you could tell us why not, so we can make it even better the next time. Larry Dresner, I've been here about 10 years. I consider myself to be a resource to you so that at any time while in retirement, if you have questions about the pension, how it works, if you have any other kind of financially related questions, you can feel free to reach out to myself or my colleagues, and we'll help the best way we can. So thank you again for joining us today. And now I'd like to introduce my colleague, Dolly.
Thank you, Larry. Good afternoon, everybody. My name, as most of you know, is Dolly Rios. I'm a CPA licensed in the state of New York. I'm the principal at Rios and McGarrigle, LLC. I have been preparing tax returns for over 25 years, and I'm also a resource to you as I'm one of the people who answers the tax hotline. I have been the only person for a while, but luckily we're going to get some help in a few days. Thank you so much, and without any further ado, we'll go into the presentation. So today we're going to be discussing clergy taxes, and as most of you probably know by now, clergy have dual tax status. They are determined to be employees for federal income tax reporting purposes, and they're deemed to be self-employed for Social Security purposes. During your active life, you receive a W-2 and not a Form 1099. In retirement, you receive a Form 1099-R, R for retirement. Clergy are usually exempt from withholding, which means that they need to make quarterly estimated tax payments. In retirement, you will only make estimated tax payments for any type of supply work that you do. You might not need to make any estimated tax payments for your pension. And you can voluntarily have tax withheld when you are employed if you do supply work. Next slide, please. Oh, and we're happy to announce that the 2025 Clergy Tax Return Preparation Guide is now available at the cpg.org. That is C for Charles, P for Peter, G for George, .org. So some of you have called the tax hotline wanting to know if the preparation guide is available. So now it is. So that's a good thing. Now we move on to some of you, since we are having this webinar for the retirees, might not have any more income while working, but if you do, just know that any cash compensation that you received is considered federally taxable, and any additional taxable items, such as any Social Security reimbursement that you received, or any other type of supply work, counseling, or consulting, that is also considered federally taxable. And obviously, you pay SECA tax on your federally taxable earned income, as well as your housing allowance. Federal income exclusion. I'm not quite sure if this would apply during retirement, but some of your pre-tax contributions to a 403B plan, which are the equivalents of 401ks when you work for a not-for-profit organization, and traditional IRAs would not be subject to federal income tax. And in retirement, as most of you know, your housing allowance is eligible for housing, or it comes to you designated as housing, and it is up to you to determine how much of that amount would be taxable. So Larry, I don't know if we go over this cash housing allowance versus church-provided housing, but
No,
maybe...
we don't really need to, no.
Yeah, so just keep in mind that during retirement, your pension, as I mentioned, comes designated as housing. So what you need to do is make sure that you use the lower of either the fair rental value as furnished plus utilities, or the actual expenses to determine the non-taxable portion. Anything, the lowest of those two numbers will be the number that you select, and then any excess would be the taxable amount.
So I'd like to chime in for a second here. If
Yes.
you are receiving a pension and you are doing work, there are some pension rules you need to be mindful of. If you're retired and you're under the age of 72 and you want to work inside the Episcopal Church, there is a salary cap. It gets changed every year or so. I think last year was 44,500, which means you could work and make less than that money and it will not affect your pension. If you are retired and working outside the church, there are no limitations as to how much you can make. Okay, and after age 72, as long as you have your bishop's approval, you can work inside the church and make as much money as you want. So just be mindful of that salary cap that does get changed every year or two if you are retired and working inside the Episcopal Church. Thanks.
And I think the next slide I will pass over to you.
So accountable reimbursable plan is really if you are working again while retired and you have business related expenses, because as a W-2 employee, you cannot make a deduction anymore. So you could set up what's known as an accountable reimbursable business expense plan where you submit documentation of the business expense you incurred and your employer would reimburse you for that amount, dollar for dollar. The IRS does not get involved. There's no tax implications. So just be mindful that if you're working and you have business related expenses in your W-2, you should work this out with your employer. If you're just doing 1099 work here and there kind of stuff, then that's something you could look at deducting on your Schedule C. But if you're W-2, you should think about accountable reimbursable business expense plan. If you have more questions, there's a publication about this topic with the IRS. And certainly, if you work with a tax preparer, they could guide you through this process. Next slide, please. So this is an example of some of the business-related expenses. Books, trades, journals, newspapers. If you join organizations and they have dues. If you have continuing ed, certain meals for business purposes, non-commuting transportation, which means travel from home to work is not a business expense, but traveling work to work is. Business use of a cellular phone. I see that there are some questions already coming up about cell phones. A landline phone can be counted towards your housing allowance exclusion numbers, but a cell phone cannot. A cell phone is a business expense. And I know many of us no longer have a landline and we use our cell phone for everything, but the IRS just hasn't come up with a definitive list of what can be used as a housing allowance. So they haven't caught up to, no landline, yes, cell phone. So it's a kind of a gray area. So we'll just have to play that part by ear. So this is just a general summary. Certainly your tax preparer will know more details about what are business expenses that you could deduct. All right, so next slide, please. So federal taxable income in retirement, pension payments in excess of your housing allowance, because we do declare that 100% of your pension is eligible to be designated as housing allowance. You still have to calculate the math. It's not all tax-free. It's eligible and you have to do the math. Certainly, if you're working in retirement, salary would be taxable. Distributions from our 403B, and here's that word again, are eligible to be designated as housing allowance. You have to do the math. But if not, then they would be federally taxed. So that's just a list of some of the things that you will have to discuss with your tax preparer about what's federally taxable in retirement. Next slide, please. Traditional IRAs, when you take a distribution, they will be taxed. Roth IRAs typically are not taxed in retirement. Social Security may be taxable. The general rule for that is if you're filing joint, married filing joint, once your combined income starts hitting in the low 30,000 range, your Social Security benefits will start being taxed. Up to 85% of that benefit could be taxed. And I know 30,000 is kind of unrealistic, but when they set up Social Security, they never index that number for inflation. And again, if you're doing any 1099 work, part-time work, it would be federal taxable. Next slide, please. So exclusions, we talked about the housing allowance. Let me make up the numbers just to make a point. Let's say your pension is 40,000 and your housing allowance is 30,000. So when you do your 1040 at the end of the year, the first $30,000 of your pension would be federally income tax free, and you're just paying federal income tax on the remaining $10,000. Okay. And we're only talking federal level, we're not talking state. So you need to do the math to calculate your housing allowance and apply that towards your pension, and that appears on line 5A and 5B on your 1040.
And Larry, may I add something? Some
Of
people
course.
ask, is it subject to self-employment? No, the pension is not subject to self-employment tax.
No. And if you're doing any church-related income work while retired, you should set up a separate housing allowance designation. But remember, you only have one housing allowance number calculated, and you need to split that between both your pension and any kind of work. You can't apply the entire housing allowance towards both of them. Okay, next slide, please. Also, non-cash benefits would be the post-retirement health subsidy and any life insurance benefit up to 50,000. But when you work with a tax preparer who understands clergy taxes, they understand all this stuff. Certainly about the life insurance stuff. Okay. Okay, next slide. So our resources. You could contact us for a complimentary discussion. You can use your phone QR code. If you go to the cpg.org website, down at the bottom where it says I want to sign up for a financial conversation, you'll get access to my my calendar, where you can then select the date that works for both of us, and we could have a chat. And we also have our toll-free tax hotline. It's year-round. You can call anytime. Dolly, my colleague here today, is one of the tax hotline folks. And if you have an accountant, they could call on your behalf to the tax hotline. But do keep in mind that the tax hotline is for purposes of answering clergy-related taxes, not just general stuff like childcare credit and all that stuff. It's got to be clergy-related, okay? We also offer a lot of e-learning courses and videos on our website. If you search for that, there's a webinar about how to calculate the housing allowance and all these other things, Social Security. So we do have a robust e-learning library for you. We have a lot of tax documents that you could download to help you prepare with taxes as well. So make use of it and let us know if there's information that you'd like, which we're not providing, and we'll be happy to amend that. Okay. Next slide, please. The tax resources, the Hammer Guide is available. We also do a supplement that goes into a slightly deeper dive on some tax points that Hammer doesn't cover adequately for us. So we have the Clergy Tax Return Preparation Guide. It's up there on our website. You can download it. There's no firewall. Just go right there. We also have a federal reporting requirements for institutions. We often get questions about needing a financial tax preparer. So Dolly and I cannot make a recommendation, but we could make two suggestions. One of them would be ask your colleagues if they're happy with the tax preparer they use, and if so, can they refer? Or you can contact the diocesan financial officer, and I'm sure they know a number of tax professionals who recognize and understand clergy taxes. So that would be the best way to go. Next slide, please. This is our infamous disclaimer that basically says we're here for educational purposes only. And if we misspeak something, the documents on our website and the plan documents take precedence over anything we might have said incorrectly. All right. So that was pretty brief overview of the clergy taxes for retirees. We do have questions that were submitted by you all when you signed up. So we'd like to go through them right now, and then we'll take your online questions live. So Dolly, I think you get the first question.
Yes, yes. Okay, so one of the questions we have is, how do I report housing expenses if I live part-time in a house owned by my child? If you are paying rent and part of the utilities to your child, you will report whatever you're paying to your child as housing expenses. So that would be my response to that. Another question that we have
But
says, yes.
if you're not paying rent or anything like that, it's a bigger issue.
Right, right.
So,
If you're not paying like out of pocket for anything, obviously you cannot claim anything. But if you are paying, those would be considered housing expenses. It's like having your own
yep.
household. Okay, so another question we have, it says, can I include internet and smart home expenses in my housing allowances? Internet, yes, because we have seen it in previous cases or audits that I have studied. The smartphone, in my opinion, would be permitted. I have not seen an IRS ruling on this, but you got to use your best judgment. Like if you have a cell phone that you're utilizing to activate the smart home application, you might need to allocate whatever part of the cell phone monthly cost is to that particular smartphone application. You cannot use your entire cell phone bill to say all of it is housing. You have to use your judgment and be conservative, because we don't know if the IRS might come back and say, well, we don't allow that.
Yeah, so to just dovetail to that, the IRS has never made a list of all the expenses that could go into housing allowance. So Dolly and I are just referring to generally accepted numbers that we've been using for years, and doesn't seem to have ruffled the IRS. But the smart home could be like a gray area, so do tread lightly.
Right, right, right. Um, we also have a question about documentation that what documentation should I keep for housing allowance expenses throughout the year? My recommendation would be just keep your receipts. It could be paper or digital, but you have to keep your receipts for payments of your real property tax, payments for home insurance, payments you make for basic cable, basic, utilities. All of that would be uh, paper or digital trails that receipts that you need to keep in order for you to support your housing exclusion. Anything else you would like to add, Larry,
No,
to that list? Okay.
basically, if you just keep a manila folder and you throw the bills in there, and you keep that with your tax paperwork, so if you get audited, it's all in one place.
Right. Okay, so another question we have is, can I use fair market rental value for your housing allowance if you don't carry a mortgage on your home? The housing exclusion is limited to the lowest of fair rental value as furnished plus utilities or actual expenses. So basically, if your actual expenses are lower, you can only exclude the lesser amount. So just for the purposes of making a point, as Larry would say, let's say that the fair rental value of your home is $30,000. But since you don't have a mortgage, your actual housing expenses are only 15, 1.5. In that specific case, you would only be allowed to use the 15,000 as an exclusion, because that's the lowest of the two amounts.
Mhm.
Okay, so now we have another question. Larry, would you like to go over that?
Sure. How do I handle housing deductions if I live in a continuing care retirement community? So typically you get a bill at the end of each month while living in a retirement community, and it's all lumped up into one big fat number. So what you do need to do is you need to go to the business office at the retirement center and ask for an itemized bill. Okay. And the bill, when it breaks it down, shows you this is how much for the rent for the room. And that's the number you'd use to calculate towards your housing allowance exclusion. Because if the bill includes the beauty parlor once a month, or entertainment once a month, and food, you have to back that out. You can't use it to calculate your housing number. It can only be part of the bill that relates directly to the room you're in. And give them grief if they say no at first, because you need that. All right. And they should be able to do it because they've had to have been asked that previously. So just get an itemized bill and use the numbers that are only related to the rental of the room.
Right.
So
And
next,
Larry,
another, yes,
sorry,
sure.
let me add something. What I've found in answers that I have provided during calls to the tax hotline is that someone once told me that the retirement community or facility will always have like a percentage, like they would say out of your monthly bill, 60% is considered like a rent. So that could also be a percentage that you can use as, to calculate what portion is your housing for housing.
Good point. Thank you. Another question is, where do the clergy housing deductions go on the 1040 tax return? Line 5A is going to be how much did you receive as a pension? Line 5B is going to be how much of that is taxable. That's where you subtract out your housing allowance and carry over the remainder to the right-hand side column of the 1040 and bring it down to the bottom. That's where you're paying taxes. So it's all on 5A and 5B. Can deposed clergy receive the housing tax deduction? Yes. Can supply work 1099s count as housing allowance? So remember, you only have one housing allowance. It's the cost of your primary home. And however you allocate it between 1099 work and your pension is up to you. So you could, if you want to, but again, keep in mind that you only have one housing allowance and you cannot double dip on that. Are clergy spouses of deceased clergy allowed to take a housing allowance deduction? No. What the way we say it is, a retired clergy can still declare housing, but that housing allowance goes with them to the grave. So if they leave any part of their pension, the clergy pension, to their spouse, the spouse will pay federal income tax on it as normal because they do not have that housing exclusion anymore. Next question is for you, Dolly, I believe.
Yes, yes. So I think this question relates to a question that you answered previously. How do I report pension payments on my tax return? Pension payments are generally reported on lines 5A and 5B as in boy of your Form 1040. And I believe you had addressed that question before. Another question we have is, are my pension and Social Security benefits taxable? Well, that depends on how much of your, it depends on your particular situation. If the taxable portion of your pension is substantial, maybe some of your Social Securities might end up being taxable. But again, it depends on your particular situation. Then we get to deductions.
Yep.
Larry, you want to address some of those?
Sure, and then I'll punt over to you. No, are there specific tax deductions I can claim as a retired clergy member? So the biggest one is the housing allowance exclusion. Anything above and beyond that for deductions is beyond the scope of this webinar, and you should have a conversation with your tax preparer about that. But keep in mind, as a retired cleric, you have the housing allowance exclusion all the way through retirement until you decease. Can I deduct expenses for items like a home office supplies? Our favorite answer when it comes to taxes for Dolly and I is it depends. Because if you're retired and now you have another job, whatever it might be, that's a whole different ball of wax. Because if you have a home office, then yes, you may be able to have a home office deduction along with those supplies. But then you got to worry about calculating what that home office is and backing that out of your calculation for a housing allowance, because you can't do both. You can't, if you have one bedroom in your house as an office, and let's say it's 100 square feet, and your home is 1,000 square feet, so that's a 10% thing. But you can't use the 1,000 for the housing allowance because 10% of it is now used for something else. So you have to back it out. So if that's not clear, give Dolly a call. That's where I'm funding. What changes are expected for the 2024 tax year regarding housing costs and deductions? My crystal ball is a little cloudy on that one. Do you have anything, Dolly?
What changes are expected? I mean, we haven't seen major changes in regards to the housing allowance. Again, we keep mentioning that the IRS has not posted like a significant or a comprehensive list of what constitutes items that they allow for housing expenses, but I don't foresee, and I haven't seen any changes per se to the housing allowance rules.
Right. And with the current administration, if they make any tax law changes, whether or not they go retro back to January, your guess is as good as mine. But so for now,
but that will be applicable to 2025 anyhow. I don't think they'll go back to 2024.
So for now, we're all good. Everything's great. So can I deduct expenses related to my continuing ed, such as workshops and professional books? The short answer is yeah, but the long answer is I need to know a little bit more about that because if you're retired,
Right.
why would you have continuing eds to keep your skills up if you're retired? So, but if you do have if you started a new career or a side gig, then that might be applicable. Yes. So, for financial planning for education, references to 529 plans or funding for children. So, a 529 plan is a way to save tax deferred money towards college and higher education costs. So, basically, I'll make an example here for New York. If I put in money as a New York resident into the New York State 529 plan, I get a New York State tax deduction, not federal, New York State. Now, the money is sitting in the 529, it's growing tax deferred. And then when you take the money out, as long as that money is used for legitimate higher education courses, expenses, it's tax free. If you take it out and go on a cruise, it's not tax. So that's in the state of New York. Every state in the country has a 529 plan. States that don't have state tax like Florida and Texas, I don't know what kind of a benefit they offer because they can't give you a state tax deduction. But basically, you as a grandparent can open up a 529 plan for every child, every grandchild you want. Okay, so that's a great planning tool for grandkids. And if you have any further questions about that, you can call your state 529 plan, call them on the phone, or talk to your tax preparer. Did you want to add anything to that, Dolly?
No, that's fine.
Okay. If you take the standard deduction, is there a way to deduct charitable contributions other than IRA? This is where I punt. Dolly, would you like to answer that one?
If you take the standard deduction, not anymore. There were a couple of years when they allowed you to deduct
Mhm.
charitable contributions while you were taking the standard, but that hasn't changed unless the tax law changes. Um, I'm not aware that you can take charitable contributions if you're taking the standard deduction. The simple answer is that.
Yeah. But most tax preparers will calculate your tax return both with a standard deduction and doing itemized, and they'll use whichever one is more beneficial to you. So if you were able to itemize and it works, then that's where you could get the deduction for the charity thing.
Right, that's when it will benefit you. Okay.
You're up.
Yes. Okay, so we have a question about, is money withdrawn from my Fidelity RSVP for home upgrades taxable? So the answer to this, as Larry would say, it depends. The money that you take from your RSVP is eligible to be taken as a housing, with the housing designation. Just keep in mind that you also have a pension. So if not if your entire pension benefit comes designated as housing. So remember, if you're taking your RSVP as housing, you cannot double dip on the expenses that you're using for the pension. You cannot use those for the RSVP distribution. So keep that in mind. So the short answer is yes, you can take it designated as housing, but you still have to do the calculation. Is there anything you would like to add to this? Because I know you said
Nope, you did
something
great.
before.
Nope,
Okay.
you did great.
Okay, so another question is mileage reimbursement that I receive for supplying clergy work taxable? If the reimbursement that you received is under an accountable reimbursement plan, it won't be taxable. That is the answer to that question. We have another question. Somebody read in the AARP magazine that beginning in 2025, the required minimum distributions for 403B is no longer required. Okay, so we know that as a result of the Secure Act 2.0, some of the age numbers were changed for required minimum distributions. RMDs, meaning required minimum distributions for Roth accounts for years 2024 and later are not required, but that only applies to Roth IRAs. RMDs from traditional IRAs are still required. Just keep that in mind and make sure that you know the type of IRA that you had before you make the assumption that you don't need a required minimum distribution.